Well, we're releasing the results of our pre-conference survey, and the thing that surprised us about that was the rate of change. It's been the fastest rate of change year on year that we can ever remember. And I guess if I was to comment on two or three things, one would be that cyber risks have now shot up to numbers 1 and 2. Not only 1 and 2, but 1 and 2 by a country mile. Cyber risks, top of the list was business interruption. Cyber risk data breach was number 2. And they've been on the top 5 list for a while, but they've just gone absolutely through the roof. And the extraordinary thing is that those are the 2 risks in the top 10 where our members have the lowest level of confidence about the risk management strategies that they're adopting to manage those risks. I think the second thing to say is most of the risks in the top 5 are either uninsured or underinsured or not insurable. So cyber risk, for example, less than 50% have any type of insurance for it. And 3 of the remaining top 6 actually have less than 10% insurance. So those are areas where the market is trying to develop but haven't yet completed the process to try and get penetration in some of those areas. And I think the third thing on the survey to say is on claims. We've seen a slight increase on the number of claims that members report have been challenged over the last 12 months. A dramatic reduction, if you like, in the types of challenges around the Marine Insurance Act, so basis clauses and non-disclosure, but an increase in late notification challenges. So there seems to be a different dynamic on the way that insurers are challenging claims at the moment. Well, we're reporting on innovation in the insurance market this conference. We have a report going out, and by and large it's giving the market credit for doing a lot to try and develop responses to a new and emerging risk, absolutely the theme of our conference here. But to date, I think we're seeing very few deals actually being done, and we're looking into why that's the case. And I think in many cases, what's happening is that our members are not engaging their boards soon enough in the process. But I think that is developing. So we're seeing a healthy appetite in the insurance market to do new types of deals and to cover new types of risks, but still work in progress. Well, one of the critical issues for our members is engagement with boards, and an interesting finding from our pre-conference survey is that the number of members reporting their inability to access the board has actually halved in the last 12 months. So it seems that the boardroom door is opening for our members as risk goes higher up the boardroom agenda. And we're doing some work on that. We will be issuing a paper after the conference on the risk governance and the board perspective on risk. And we've got a seminar on Wednesday reporting back on some conversations we've had over breakfast with FTSE 250 chairmen who are reporting that risk is going higher up the boardroom agenda and they genuinely are looking for help from the risk community. So we want to discuss with our members how that can, how they can actually step up and add more strategic value within their organisations if they have an appetite to do so.